Hey traders, welcome. Jamie Saettele here. It is March 17th, St. Patrick's Day 2016, midweek strategy webinar going to get started right now. So I guess if we can thank the Fed for anything, it's thanks for clarifying the situation that we are in a dollar bear market. So let's start with the US dollar chart actually. And by US dollar, I mean the FXCM Dow Jones one. It's actually had some pretty good levels on this thing lately. So we've got US dollar daily. Yeah, okay. So we had, if you recall, so this is the red line that we came into, I guess on Friday, excuse me, on Friday actually. Um, After ECB, I'll make it candle chart. You can see a little clearer. Okay, so this was ECB, okay, and we then came in Friday and we had the support. And if you remember, we had an analog, not just for the dollar, but for the euro, primarily the euro, but it was also for the dollar. And I'll bring that in here in just a moment. But the implication was that we were going to hold this thing and basically trade sideways to maybe even slightly higher into resistance towards the end of the month. And then this dollar collapse was going to get started. So that's kind of how I went into yesterday. Obviously, the dollar collapse has already started as the Fed has basically just gone full retard, suggesting that, basically losing all credibility at this point. I mean, they said that they were, considering all these rate hikes, blah, blah, blah. I never thought for a second that they'd actually do the rate hikes, but for them to actually come out and say that now they're not considering the rate hikes that they said they were considering before is pretty crazy. So anyway, where does that leave us now? So what we have to do, or what I have to do, and what I've done basically in my, the way I'm looking at this market is I'm saying now that you've got, now the market, the dollar decline it started, okay? And, again, there's different ways to look at this. You can look at it from the standpoint of, put up a naked chart here. You can look at it from the standpoint of, everything from May of last year is a wedge, okay? And that wedge, which we've talked about before, but that wedge basically means that, you're heading to the origin of the wedge, which is where it started. So there's still plenty of downside. So obviously two parts to a trade, right? Direction and timing. Well, in this case, I guess it's pretty clear at this point that the timing for the direction is lower. The timing, I guess, is more or less now. To be quite honest, I wouldn't want to see the dollar trade over today's high. I mean, yesterday's high is obviously the bigger one, but I wouldn't even really want to see it over today's high. And when we go into kind of the nitty gritty here on this, you can see we've got some congestion here, basically down to the October low, which was a pretty big low in the dollar. It's obviously a big high in euro. It was a big low in dollar yen at the time. So you could get a series of maybe corrective days, and any bounce should be sold. For me, I'm thinking that the bounce, so to speak, if we get a bounce, is probably around 11,930 to 11,940. 11,920 could be where it caps out. Obviously, that's not much of a bounce, but if this is really a raging kind of bearish type of deal market, then you're unlikely to get much of a bounce anyway. if I go to an intraday chart, okay, 240 minute, and if this is a new slope that we're going to follow, then this line right here is really the one that is kind of the kickoff point, right? So support, broke it hard, could be resistance if we get a bounce, and then kind of bounce and then lower, back into probably through April, right? Remember, seasonality wise, April is actually one of the worst months of the year for the dollar. Look at, you can look at dollar seasonality here. So March typically is actually slightly negative on the long terms. Obviously, over the last 5 years, it's been slightly positive because we've been in a bull market. But you can see that April, historically, the worst month of the year. And then June is the second worst month of the year for dollar. And that's even during the bull market. April's been a bad month for the dollar. So, we're getting obviously into that period. So that's, kind of with US dollar, with the index, 11.920, 11.930, 11.940, call it, 11.920 to 40 is really the spot to lay on full blown screw you dollar trades. And then you can see, I say 11.920 because I don't know if we actually get up to this. What if we don't get up to this spot here? What if it's really super extremely short-term bearish, and we end up just going up to this little high up here that we had during the morning session, okay, which is about 11.917. That's from the median line, okay. I'm of the mind that we probably get up here though, but we'll see. All right, so what we want to do now is go through the different components of this US dollar chart, and that chart obviously I'll put in the update. It's a good one. Where are we? Where would we go here? What US dollar? Make copies of so many charts. I don't even know what I've done here. All right. By the way, let's go back to take you back to the weekly chart real quick. So check this out. The slope that's been going on for a really long time, for years and years and years. We actually just broke the median line of that, which is a pretty big deal. So that happened yesterday. And this median line, okay, you can see all the big trading around it throughout, 2013, the breakout. And then the big tell that this is an important level, you can see how we traded up into in October of 2014, pulled off hard, and then we broke it on a gap. We broke it. It was on a gap, okay? So the fact that we're below here now, that line itself is kind of, without knowing anything else, that line itself is a big one, which is like 11.940. This is a weekly chart. Okay, so, reward to risk, very high in my opinion on the downside here for dollar. Again, allowing for sideways to a pop for 1 to 2 days, perhaps, into 11.940, and then targeting really the May low, okay, down in this region down here. All right. And again, I think it probably gets down there by the end of April, which is 5-6 weeks away, but it's still a pretty big move. I mean, that would put euro probably up in the mid 120s. So let's bring in the analog real quick before I actually get to some of the other the individual charts, I should say. Okay, I'm going to take a look real quickly here at some of these analogs. So if you remember, before yesterday happened, our working assumption, or my working assumption at least, was that we continue in this kind of drift sideways to potentially lower, market for euro, and sideways to higher in dollar, and then at the end of March and early April is really when the move that we're seeing now would start. Okay, but I have no qualms kind of saying that the market's a couple weeks early and that we should actually, kind of join the party now, if you will. Gary asking about gold, dollar, yen. Oh, absolutely, my friend. I'm going to go through all that stuff. Okay, no problem. I kind of want to, get my thinking clear for the moment for you guys, and that you understand where I'm coming from here. So, we were looking at this, and thinking that maybe the big move would really start, in 2 weeks. Okay. But look, if it's already started, it's already started, and upside potential is significant, that, I don't mind joining, into the dollar bear mode, if you will, basically now rather than waiting 2 weeks. And this is the daily chart, and was looking again, something like this, kind of thinking that we'd maybe trade lower for the next few weeks, and then towards the end of March, as early as next week, but as late as April, first week of April, we'd end up getting the move higher and getting kind of what we're seeing now. Okay. But again, if we're already underway, we're already underway, and that's what we'll work with. This was the dollar index one. This was the one from if you remember, this was actually from the long-term post, right, from December 31st, and we were looking at the market coming into a late March top, the dollar that is, and then just full-on collapsing throughout April and into May. Okay, and then after that, there might actually be a dollar blowout to the top side, believe it or not. But we're getting way ahead of ourselves now. What we want to do is focus on the trade right now. So, anywho, moving on to individual dollar pairs. Let's just start with euro. This makes sense to start with euro, right? Okay, so here's euro. A few things on this. It looks like this is actually the right. Leon asking something about S&P. We'll look at that in a sec. I'm going to go through some of these dollar majors. Okay, so here's the euro. Again, euro eventually could end up trading, believe it or not, up to this upper parallel, okay, on the weekly chart, which could put it up around 125 or so by the end of April. Okay, so there's still plenty of upside. Actually, I'd be looking up here. Okay, this upper parallel. Okay, what we just did on the daily chart, this slope here, okay, real simple pitchfork following, the March low with the August, world was ending high in euro and gold and S&P low, and then the low on ECB in December. That actually was the support on ECB on last week. Obviously, we had the right idea being long on ECB, but the markets these days, they don't move like they used to, and you get 300-400 pip moves the other direction below highs and lows before the market will continue in the direction you thought it was going anyway. So what I'm looking at here with euro dollar, if I think it's going that high, okay, obviously there's going to be stopping points along the way. I don't think that the first resistance is probably until about 115. You have 114.94, which is the October high. That's also a very long-term level here, okay. So 114.94 followed by 116.18, which is the close from that August 24th day, okay? And that would be your final daily reversal level. And that actually, you get there on 322 if we continue like this. So that actually puts us there on like Tuesday next week. And then you might get a pullback from that level, okay? So what about near term, like the next couple days? Let's say we end up getting that turn higher, although I'm not calling it a turn higher, but let's say we start getting that consolidation in in the dollar, maybe a bit of a bounce. Where we put 11, I say 11, 9, 20, 40. Am I my figures right here? Hold on. Yeah, what would say? Yeah, 11, 9, 20, 11, 9, 40 is what we were working with. Okay, so this is the 4-hour chart, excuse me, and you can see we could get a pullback here. This is the golden line, which was broken. That's huge. Okay, look for that to be support at this point, basically with yesterday's high. Okay, which was the high from the kind of the post rip higher in on FOMC. So you're looking there. You're looking at basically 112.40 on a dip as support. I will have stops under. This is where we finished FOMC. I'd have stops under this level, which is 11.97. So stops under there. You're talking at that point about maybe 60, 70 points of risk for the first resistance. Again, probably the real one, probably above 116. 114.94 could be resistance for pullback for intraday traders. But as far as swing basis is concerned, 116.18 would be really the first important level in my opinion. Okay, and again, just to drive home the importance here of that golden line. Okay. So if you remember, it's this trend line here, that trend line, which ended up being resistance, like literally to the tick on 211. After yesterday's close, I was like, you never know. It's possible that we actually get a pullback from here, and that the idea that we continue to move, to the other side is, is moving. But in any case, that level was also really huge, as we know, here, okay, here, here, here. So the fact that we've broken through it, to me, signals as much as anything, if I didn't have any other information on my hands, that we are actually going significantly higher in euro. Okay, so that's euro. So bottom line, euro 112.40s, big level for support. To look to position on the long side, and moving up into 114.90s, 116s, and 116s is where I think you probably get a bigger pause, but eventually up into the mid 120s by the end of April. All right, let's look at pound. I actually like pound even better than euro here. Okay, again, we did remember the long, remember the long-term chart for pound dollar. We did have that weekly reversal, that weekly J spike just several weeks ago. Okay, and you can see that obviously the pullback, I think I presented an account yesterday where we had that flat ABC, kind of a diabolical type of pattern, right? But not a surprise that you're going to see it on British pounds. In any case, we have ripped higher off of that. Minimum target for this move off the low would actually be the high right up here. Okay, hold on here. The high up here at 146.67, which actually happens to be equal legs up from the low. $46.53 and $46.67. Okay, so that would be the next area of kind of a pullback. As far as a near-term trade for pounds concerned, I'll be looking for support right on the weekly open price, which is 43.76. So right here, 43.76, would need to stop under 42.70s and targeting 46.50 or so before you could get any sort of a sideways pattern develop at that point. So that would be the near-term pound picture. Aussie dollar. Here's the daily. If we just look at only the long-term slope, okay, that got the low here last, or the lows down here on the sliding parallel over the summer, but that actually ended up being resistance last May. It actually was support yesterday, believe it or not. We were looking at 73.80s, 90s to get long on the retest. It didn't happen. We actually are into a level now where you could see, and this is again, if we talk about the US dollar maybe getting a day or two or three of reprieve, if nothing more than just some consolidation on the other side, then Aussie, it might be the brunt of it might be on Aussie, just because Aussie's at such a level. I mean, this is the 618 extension of the move off the low. Okay, so in Elliott wave, you would label this as kind of like 1, 2, 3, a coming fourth wave, which could get all the way back down here, and then maybe a fifth wave as the next big level. Looks like it's about 78.50, which is the high from last June, and then of course the important slope that the other. This is like the golden line slope for Aussie, we like to call it, right? But I'll be watching for basically 75.20s for support in Aussie at this point. Okay, so just under today's low. It's also the high from 3.9, so you do have some horizontal stuff there, if you will. Also, if you look back, just above 75.30, in fact, is actually the low from last April. Okay, so for whatever reason, 75 just above does look like it's a decent level, for Aussie dollar. Okay. So I'd be looking into there and then a pullback. So Aussie, again, and I'm not trying to short Aussie. I'm not trying to buy dollars here necessarily, not against Aussie at least, not against euro, not against pound. But I would be looking at Aussie coming in a bit and then looking higher off that dip. It's kind of the same across all the dollar pairs at this point, except for dollar CAD, which I'll get to in a second. Dollar yen, I'll look at it even though I hate it. Okay, so the triangle, so to speak, actually did resolve to the downside, and you're coming up on a massive level, 110.08. Again, that is the October high, okay, from 2014. Do have some stuff down there to stabilize. At this point, you'd be looking at basically 112.40s to provide to provide resistance. I mean, that was old support. Okay, you have the gap at 112.30 from 2014. You've also got the close high volume level from 211 at 112.42, and then you can just look across on the chart and you can see kind of all the the levels that were lows near that day or on that day. Even yesterday's low was near that day. Month open is 112.72. Been trading around it for basically the whole month until yesterday and finally broke down. So today's the breakdown level day in dollar yen. Dollar yen's obviously a finicky one. Could again get some sort of stabilization attempt around 110, just because you do have that October 2014 high there. You do have slope there too from this slope, okay, connecting slope back in December of 2014 up into the high in June 2015. But resistance at this point has to be 112.40s to 112.70s, okay. Don't have any sort of trade idea at this point for dollar yen. Not just yet anyway. Okay, dollar CAD is one that I would actually be, again, I know I talked about yesterday the 2009 high at 130.62. Obviously that didn't hold. We went right through it. Okay, but you are on a very steep channel, okay, at the downtrending support. I would just be aware of the potential for the dollar CAD to maybe turn around a little bit, and maybe the way to play it is not necessarily through the dollar CAD. Maybe the way to play it is actually through the through some of the CAD crosses. But one reason, obviously, so dollar CAD, I put up that chart yesterday, but 9 weeks down in a row, that like pretty much never happens. It's happened a few times in the history of dollar CAD, and there's only one time where you didn't reverse very hard, during the 10th week. So that's one reason I think to take a look at dollar CAD. Another reason, obviously, is coming into just massive levels. And crude oil now, by the way, we'll take a look at crude. Crude oil has traced down 5 waves. I put that chart up this morning, right? So you do have a 5-wave rally in crude. 1, 2, 3, 4, 5. I'm not saying it can't extend a little higher, but 5 waves up, you should expect to see, a kind of a topping attempt, if you will, or a pullback that gets underway towards the 4th wave. So there's a few things here. One, the rally in crude in 5 waves does strongly suggest that, that the major low, like this is the low. Like all that stuff we wrote about crude back in the day, the low is in, okay, or at least a really big one. But it tells you that the next decline should be bought, okay, on a longer term basis. And the obvious levels for support on that decline, basically the 4th wave of 1 less degree, which is $36. Okay, and if we were to get that pullback starting from pretty close to here, which I think it actually does happen, then that low might actually be on this slope as well, okay, at some point. So that's something to watch for crude, maybe coming into some sort of a near-term top. You've got, this is a continuous contract year open, and that's 40.73. Let's see what it looks like on the see what it looks like real quickly on the CFD, because I know the charts look a little different. Hold on. So the CFD, where is the first day of the year? It's actually right here. So the first day, we've already actually gone through the year open on the CFD, actually into a different level on the CFD. It's the November lows. Okay, so, but the same idea. In fact, the CFD actually does offer a little cleaner chart as far as maybe getting support down here, 30, 34, 35 bucks. Okay, so anyway, the thing to take away from this, to take away from this chart, my opinion, the crude chart, is that it is coming into important resistance. And pattern-wise, you do have 5 waves up, so be on the lookout for some struggles for crude oil at these levels, and potentially a decline that actually gets you all the way back towards $36 before you get another another move higher in crude oil, and then therefore CAD. So that is, CAD, if there's a place where I'd be looking at potentially going the other way for this dollar move and trading, in the direction of dollar strength, it would be dollar CAD. I would have to see something on the chart that gets me wanting to do that. Like, I'm not trying to catch the falling knife, especially, with the dollar breaking, basically everything. But the logic, and there's actual reason to potentially do it for a trade, and that's it. But is there at least. Okay. All right. So on that note, why don't we look at some crosses, because talked about CAD maybe being an area that you could actually maybe try to go the other way, while at the same time the other dollar pairs look like if you get any reprieve in dollar weakness at all, those are things that you should be going against and buying and selling the dollar into those levels. And the specific levels, 112.40 euro, 143.76 pound, 75.30 40 Aussie. Kiwi I haven't really looked at because I still don't know what the hell's going on, but we'll take a quick look at it. Okay, here's Kiwi. So we've broken. I guess at this point you do have to say that the market is breaking to the upside, like for real breaking to the upside in, for Kiwi, and the attractive, levels probably about 70.35 as far as the first level that I'd look at. 2 legs up from the low back in August, and then it's this long-term slope line, which is the same slope that we just broke above. Okay, we're at the year open right now, by the way, so Kiwi is now slightly positive on the year. 70, if there's a pullback, like we said, with the other dollar pairs, talking about maybe a pullback in the dollar from nearby because of where the US dollar is, 67.70s would be the area where I'd be looking, for support. Okay, you got those 2 highs there, stick out like a sore thumb. 67, 80, 90, actually you got highs over here, but 67, 70s recent history is where I'd be looking at support at this point for the US dollar, or sorry, for Kiwi dollar. Okay, so let's look at some crosses real quickly. Combining the CAD crosses with maybe some of those. So pound CAD is interesting. It's a daily chart. So pretty bullish on pound, right? As noted for the last few days. Pound, Swiss, Euro pound seem to be turning around here. Pound CAD is going to make a J spike today, as you can see. Even if this is a broader downtrend again, you could get a bounce back up into the median line, which is like 193. So even a counter trend move for pound CAD could send you back, another 500 pips or so on the upside. You can see here 1, 2, 3, 4, 5, 6, 7. So you could get a bounce, another low. Either way, you'd be looking at a bounce at this point. And you have kind of support from both sides at this point. You've got the very, very long-term support Okay, remember this is the area in which we made all these lows last year and in late 2014, before we went higher. But you've also got downtrend support. So again, even if this is a big downtrend from up here, okay, you still have potential for a much, sizable rally from a trader's point of view. Okay, and interestingly enough, the double top, which you made here, you know what the target for that was? 184.94. Okay, again, that's just taking the price distance from here to here. Okay, so the August 2015 high to the October 2015 low, and then extending it and getting 184.94. And guess what? Today's low is 185.08. I'd say that's pretty close. And you'd be, saying that you've got a met target and you've got support from other methods. So pound CAD is one that might be an interesting look. And I'm looking on the near-term chart. I mean, this is a 15-minute chart, okay? But even here, you've got an impulsive advance on the upside, okay, from today's low during Europe. Okay, so that'll be something to pay attention to for a new trade moving forward. EuroCAD still held that trend line, right? So this was the trend line. This was ECB. I like pound CAD a little better. Not a surprise given the action and thoughts on Euro pound and pound Swiss and where those crosses are trading right now. But it's still a valid setup at this point. You've got the long-term trend line support, and at this point you do have a very sharp advance and a three-wave decline. Okay, let's see where you would get two equal waves on the downside here in pound or in EuroCAD. 145.33. See where the 618 is. Already retraced 618 actually. So it's not out of the question. You actually already have a low in for the secondary reaction move in EuroCAD at today's low at 146.16.17. And with this one, with EuroCAD, I'd be looking at 52.50, which is weekly reversal resistance. Okay. And then Aussie Kiwi. Remember, we've got what could be a very, very large, giant, significant multi-year reversal pattern underway. We're right at this huge trend line, okay, that goes back. This is 2011. This goes back 2012. Don't really think you have many other good touches on it, but irrespective, you've got just significant trading action around this trend line. And the near-term fork, this is one that we'd actually been following for a bit. Go to an intraday chart. I would watch for support at this point here, basically 110, 80s, which is the high here from November. Okay, and it's really when we broke through. This was, I think, the RB and Z rate. This was the RB and Z rate cut right here. Hold on. Okay, so be watching for support around that 110.80 region. The median line's a little higher over the next, couple days or so, closer to 111.15. But idea remains the same, and that is, you could have a much more significant Aussie Kiwi advance underway. You have bullish slope to work with, so kind of look at support on dips, in my opinion, and that's where I'd be looking at. At Aussie Kiwi here over the next couple of days. So those are some of the non-dollar crosses that look interesting from my vantage point. There's still, obviously, don't forget about this one. We still have, and lo and behold, pound kiwi actually did do it. It actually did do it today. Look at what pound kiwi hit today. It hit daily reversal support today, right here. Close of that, today's low. You still have this potential for, don't forget about this one. I did a whole video on this, back in a couple weeks, I mean, it was 2 weeks ago. Or it might have been 2 weeks. Was it last week? 2 weeks ago. Either way, you do have potential for a significant move higher in pound kiwi. You've got what could be a wedge. We've got this long-term slope here. Parallels on this are really pretty. Okay, so you could get resumption of this pound kiwi move higher. If this is to prove like this is actually going to happen, if we're going to break out of this wedge here and go a lot higher in pound kiwi, I would think that you actually get a fairly weak kiwi dollar. I can't imagine this all being pound and the kiwi's going to go a lot higher. So I don't know. Maybe kiwi is going to trade up to that 70-35 region and then fail. I'm not sure. Unless this latest move in kiwi is another big fake out, tough to say. Obviously, you don't know ahead of time. But it's tough to argue with the kiwi moving aggressively into these range highs. I feel like it's going to break higher into 70-35, but whatever. This is there. It's a possibility. It's still, just that, a possibility. You still have to break outside of this range, okay, of this wedge in order to suggest that you do have a big move higher in the making, okay? All right. There was questions on gold from Gary, so let's take a look at gold. I think it's pretty much the same as what was laid out over the weekend. Gold's been a pretty good technical market of late. So we were looking for kind of some weakness and in support, kind of a series of fourth and fifth waves on the upside in gold. Let's see if I can. Here we go. Okay, so there was that. Okay, so I would be putting this. So we did trade off early in the week. We did come into support. I think we were looking for 1230 or so, and the low was 1225, 1225.6. So at this point, what you're looking at here is probably, look, there's a couple things here. One, if you poke to a new high over the next few days in gold, that's probably your fifth wave, okay? So that's a possibility. The other possibility, and one that I actually kind of subscribe to, is that you're going to go sideways for a little bit here, okay? Because a lot of times fourth waves are sideways affairs. You get triangles, you get flats. A lot of times you get triangles, in which case you're actually going to pull back a little bit now and then, kind of trade sideways for several days and then get the next move higher, okay? So why don't we look at the internals of this gold chart and see if we can figure out. Okay, so if this is the peak here, okay, I'd gather to say that this is a three-wave decline, right? A, B, C. But I'd also gather to say that this is a five-wave rally. 1, 2, 3, 4, 5. That tells me that we're not going to have a triangle, that instead this next dip is going to result in a move to a high, okay? Even if you are going to have a broader triangle, either way, just know that the next dip is going to result in a move higher again. So that means that you're looking for support most likely in the 1248 to 1243 region, which is the 50 to 618 retracement of this move higher. Okay, and actually, you know what? This really does fit quite well with the idea that the US dollar is going to maybe get a bounce, a short-term bounce. Okay, I mean like a day or two, before the next selling resumes. Okay, a five-wave rally in gold. 1, 2, 3, 4, 5. Look for three waves lower, A, B, C, and then the next move higher in gold. But that means that you'd also probably get, go to a daily chart here real quick again. That means you'd also probably get, your fifth wave high is probably going to be somewhere around 1307, 1300. Oh, by the way, guess what is the level to look for support? It's the breakout day from 211, the initial big move, which is that still a big volume spot and a level that I'd watch for support, which happens to be right in the middle of the short-term fib anyway. So it's like 1247. So, kind of support here, look higher after that, but the next top is probably going to be up around 1307.50, which is a couple things. It's the January 2015 high. Okay, it's also a median line from a structure that could be in play for quite some time. So, you're going off the lows here from June of 2013, the highs from August 2013, and the lows from December of 2015. Okay, so that is what I've got on gold. Glad we just went through it actually, because it does fit quite well, with what we talked about anyway. As far as the dollar maybe getting a day or two of bounce before it gets crushed again. Let's see. Hold on for a second here. Here's the question box. I just lost the question box. So Gary, does that make sense with gold? Okay, great, super. Yeah, so again, just real quickly, 1248 or so, 1246 support into new highs, wave 5. Then you're going to get probably another fourth wave drop, okay, and then you're going to get new highs again. All right, so all this probably takes place again through the end of April, which is a seasonally weak dollar, part of the year. Leon looked in February, it looked like S&P was collapsing into oblivion, and now talk is about new highs. Can same occur with dollar index now? Yeah, so with the S&P, S&P is actually getting, I think we've actually gotten into, we're at 2040 right now. Remember those posts from last week about the, we had A, B, 1, 2, 3, 4. This was the trap, remember, A, B, C. And now we're working higher in that fifth wave. So 1, 2, 3, 4, 5. I don't know if we get to new highs or not. I doubt we do. I bet we get to like 2070 before we collapse again in the stock market. But no, I don't think that's going to happen right now with the dollar index. As I went through the stuff earlier in the webinar, obviously so here's the dollar, right? So we were looking for us to hold up a little bit longer for like 2 more weeks or so before this started, right? And actually, this is the U.S. dollar index superimposed. Here's what we are. Here's what we were. We were looking at this, and then we were looking for the collapse. So we were looking for high, really kind of closer to next week before really the selling, intensified. But it does appear that that's already happened. Okay, so I will say, Leon, that we could get new dollar highs, but the low for this move probably is going to be at some point towards the end of April or early May. Okay, so if we go back to just the U.S. dollar index, the daily chart, let's go to a weekly chart again. Your levels to watch for support. Again, we got the wedge break, so target is new lows below May. You could be coming in a couple levels to watch for support, going to be the year open from last year, which could be down on this line. Okay, so if we look at this from an Elliott case, this is probably something like 1, 2, 1, 2, 3, 4, 5, 3. This is probably a fourth wave decline. And we'll see where the retracements are for this. 11,326. And here 11,564. So I'd be looking a little more like, kind of 11,564, but we'll hopefully be able to get a better handle on it, once we get down there. And the timing is the bigger part, as far as I'm concerned, because you're looking down towards, the seasonally positive part, for the dollar, which is basically in May. Leon says, so you're inclined to believe after bottoms, wherever it does, it likely leads new high. I think that's a distinct possibility. I think that you could still get a blowout on the top side for the dollar. In other words, let's take a look at a long-term dollar chart, okay? DXY chart. Hold on. Okay. So here is, you've seen we've had many bull markets, right? In dollar index. Some monthly chart, and put up RSI. The overbought condition on the US dollar occurs when the first big threat, it was up in March, right? It was actually at the high. We were writing about it at that time. Since then, it's been very difficult to trade. This has been just a complete disaster, but here we are now washing out. This thing could come all the way back to this median line, okay, which would be nothing more than a retest of these levels, okay? In the grand scheme of things, a retest of these levels and then absolutely go skyrocketing. The area I think we're in as far as, the trend is like here, right? And that's what we've been comparing this to. That's what we've been looking at. We've been comparing this to March, and then this, we were looking for, this to be March of this year. And then we were looking for this to be April of this year, okay, right here. It looks like the market was 2 weeks early, okay, so be it. But yeah, there's downside, right here. And this is basically, in my opinion, probably, I mean, it's going to be obviously a very sharp dollar decline on the dailies and weeklies and everything else, but on a monthly chart, this is probably just going to be a decline into support where you broke out from. Okay. I mean, this dollar advance is really nothing to write home about as far on the longer term scale of things. I mean, this is nothing like obviously the 80s. It was actually more consistent in its first run up, but that actually tells you that I think you're at the beginning of a larger move higher. Okay. So this would be more of like kind of the interruption period, if you will. And you can even see this on, you know, if you look at it from this angle, just from the lows back here, you can see kind of a 1, a 2, a 3, maybe a fourth wave here, like a flat, which would complete on a move down below the lows from August. Okay, and this is again dollar index DXY. This is not US dollar, USD OLLAR, so they're different. But that's what we're looking at as far as the dollar index is concerned. So yeah, keep your eye on the prize here near term, which is looking for sales in the dollars, at the levels we talked about, euro 112.40, pound 43.76. Aussie's getting into resistance now, but 75.30.40 would offer an opportunity, maybe 67.70 in Kiwi, those levels. But and look for but we'll be looking to maybe change that tune as we get into the end of April. Yeah, Leon saying it sure seems like a breakout from long-term downtrend line needs to create more up than we've seen so far. Yes, I agree. And we're finally now getting a much needed correction from what has been a very long-term beginning of, I think, of a much longer-term move. Again, you can look at this in the context of we broke out, okay, in December of 2014. We had 3 months higher. We've gone sideways for a year. And now we're getting a move back into what was basically the breakout level, okay? And then the dollar will resume its path higher, all right? So that is that for the buck. I am going to wrap it up right here. Been on the mic here for an hour. Got a lot to get through. Gonna try to put together those setups for pound CAD is probably the next one that I'll be looking to play, and obviously outlining the big near-term levels for the dollar pairs as far as getting involved, specifically pound. Right, I just like the pound trade. I like the pound trade. You've got all this fear over Brexit. You've got a COT position where speculators are like the most net short pound they've been in like 5 or 6 years, meaning that there's a lot of upside potential. I can actually show you that real quickly here. That's another reason, by the way, that I don't trust, or it's very difficult to trust what you see right now with the yen. I put that chart out earlier. Anyway, so check it out. This is Matthew Bunner asking on TradingView best symbol for viewing the US dollar. So if you want to look at, there's two of them, right? You can look at US dollar, okay, which is the FXCM US dollar index, okay? Or you can look at DXY, which is the ICE dollar index. It's like your more traditional dollar index. Anyway, so you can see right here, you see this red line. This is speculative positioning, okay? And basically, you can see that the last time we were even close to this short was back here in January of 2015. We had a nice run higher. But the last time we were this short was actually back here in 2013 in August. That preceded a substantial run, which really went straight up for a couple of months and, eventually into the top in 2014. But there's significant bullish potential on the pound because of this, okay, combined with obviously the long-term levels we've come into, which have been highlighted. The other thing is with this Japanese yen trade, so obviously Japanese yen's made a new high today, right? Well, we have, and highlighted this earlier in the week, One reason to kind of question the sustainability of this move in yen is that speculators are now the most long yen, in other words, the most short dollar yen that they've been since 2008. Okay. And back then, you actually did have a spike higher. And incidentally, it was actually the week of March 21st. That's interesting. This is the week of March 18th. So maybe it's literally a repeat, in which you got that high in yen, which is a low in dollar yen. And then the market came in for, like 5 months, okay, before you continued higher. This was the financial crisis and everything. So, the only other time, by the way, that we actually have had this position in yen was back here in January of 2004, and that would have been a very difficult trade. We kind of traded higher in a diagonal in dollar yen or in Japanese yen, and lower in dollar yen in a diagonal before you got a sharp collapse and then a new high. And this, by the way, this pattern, if you just look at this pattern right here, this actually is kind of reminiscent, but this is a much smaller scale, but this is kind of reminiscent of what the US dollar index could be doing right now. Okay, right? We broke out of a level. We just showed the monthly chart, diagonal up from the May low, collapse below the May low, finding old resistance axis support, and then go to new highs. Cool. All right. So I got to wrap it. Back to the grind, and you guys have a great rest of your week. And we'll get this up and archived and get working on the post for tonight. And everyone have a good one. All right. Thank you so much for attending. Have a good rest of your day and week. All right. Bye.